the world of commerce, it's definitely shifting fast. I mean, some people are saying the next 5 years could change how we shop and pay more than the last 20.
It's a bold statement, yeah, but
Okay.
honestly, not entirely surprising given the pace of innovation right now.
Exactly. And that really sets the stage for today's deep dive. We're looking at PayPal's latest earnings, Q2 2025.
Right, we're pulling from their conference call, the press release, getting the direct insights.
And the idea here, for you listening, is to pull out the key takeaways, maybe some surprising bits, and basically give you a shortcut to understanding PayPal's whole strategy, how it affects how we'll all be shopping and paying soon.
It's definitely a pivotal time for them, and they're making some pretty significant strategic moves.
So let's get into it. PayPal's Q2 2025 results. What were the big headline numbers that jumped out? What tells us about their current health, their momentum?
Well, looking at the top line, net revenues grew 5% to $8.3 billion. That's solid. But what I found more telling, perhaps, is the transaction margin dollars, or TM1. That increased 7% to $3.8 billion. And importantly, if you exclude the interest they earned on customer balances, it was actually up 8%.
8%, so better quality growth.
Exactly. They called it a meaningful improvement compared to the last 3 years. It signals they're not just growing volume, but the profitability of each transaction is improving. It's a much stronger indicator long term.
Right, makes sense. What else?
Then you've got non-GAAP EPS, earnings per share, which gives a cleaner view of core profitability. That was up a pretty impressive 18% year over year, hit $1.40.
18% is strong.
It is. And total payment volume, TPV, that was up 6% to nearly $444 billion. So you put these together, it's not just numbers on a page. It really suggests their strategic shifts are, starting to work. They're generating real financial results.
That profitability piece, the TMM, is definitely interesting. Beyond those big financials, what about engagement? How are people actually using PayPal and Venmo? Are they using them more?
Yeah, that's key. And the data looks pretty good there, too. Total active accounts grew 2%, hitting 438 million. Monthly actives also up 2%.
Okay.
But the figure that really stood out for me was transactions per active account. If you exclude the PSP stuff, that grew 4%.
So people are using the platforms more often.
Precisely.
Uh,
That shows stickiness, which is crucial for long-term value.
hmm.
And just from a financial health standpoint, they also generated $0.7 billion in adjusted free cash flow and bought back $1.5 billion in shares just in Q2. Shows discipline.
Okay, so putting it all together.
Yeah.
Strong quarter, good engagement, decent financials. But how does this fit into the bigger picture? Are they just processing payments better, or is this like groundwork for something more?
Oh, it's definitely about laying groundwork. This solid performance, it's foundational for what they see as a massive transformation. They're very clearly trying to shift from just being a payments company to becoming a what they call a dynamic commerce platform.
Dynamic commerce spot. Okay.
Yeah. And they genuinely seem to believe that line about the next 5 years bringing more change than the last 2 decades. And they want to be driving that change, not just reacting to it.
That's a huge ambition. I mean, especially with all the competition out there. So how are they actually planning to do that? They mentioned 4 strategic growth drivers.
That's right. A real laser focus, they said. We should probably dig into each one.
Okay, let's do it. First up was winning checkout and expanding their branded experiences. So what are they doing to make sure people choose PayPal or Venmo when they're buying something?
It's really a multi-pronged approach, and the numbers suggest it's gaining traction. Their overall branded experiences, TPV, that grew 8% currency neutral.
8%, okay.
And the online branded checkout part of that grew 5% currency neutral. They did note that would have been 6% if not for some headwinds in Asia related to tariffs.
Right.
But they said that's stabilizing now.
So that 8% growth in branded experiences, that's key, right? That means people are actively choosing the PayPal button.
Exactly. It gives them more control, better data.
Mm-hmm.
It's much better than just being one generic option among many. And they're actively upgrading the checkout itself. Rolling out newer versions in the U.S., over 60% of U.S. checkouts are on it now, plus Germany and the U.K.
And those upgrades are working.
Apparently, yes. They're seeing meaningful conversion rate improvements, which, means more sales for merchants, which keeps everyone happy. Plus, they're investing in things like subscriptions to drive repeat branded checkout use, building that habit.
That makes sense for online, but commerce isn't just online anymore, right? What about physical stores? What about newer things like buy now, pay later?
Right, and this is where it gets really interesting because they're trying to be everywhere. Take buy now, pay later, BNPL. Volume there grew over 20%.
Wow, 20%.
Yeah, and monthly active BNPL accounts climbed 18%. And here's a fascinating stat. When someone uses BNPL, their average order value is over 80% higher than a standard PayPal checkout.
80% higher. That's significant.
Huge. And they feel they're winning in BNPL. Because of their scale, it's easy to use, good value for the customer. They claim it's the most broadly distributed BNPL solution.
Any specific examples of it working?
Yeah, they highlighted Ace Hardware. Ace started showing the BNPL option much earlier in the shopping process, like on the product page, not just at the very end. They called it upstream messaging.
Okay.
That, plus a 0% APR promotion, led to a 35% year-over-year jump in total PayPal sales for Ace. And get this, a 7-fold increase in average order values for those BNPL transactions.
7-fold. Okay, that upstream visibility clearly works.
It really does. And BNPL is now in 9 markets globally, with plans to expand more.
Okay, so BNPL is one piece. What else? You mentioned Venmo earlier.
Yes, Venmo. That's a really interesting story. For ages, the question was, can Venmo actually make money beyond just friends paying each other back?
Right.
Well, now they're saying the answer is a resounding yes. Venmo's revenue grew over 20% in a quarter. TPV was up 12%, which is actually its highest growth rate in 3 years.
So how are they doing that? What changed?
They're actively repositioning it, moving it from just P2P towards being an everyday commerce platform.
Okay, like using it to buy things.
Exactly. And a kind of surprising part of this strategy is these deals they've done with the Big 12 and Big 10 college conferences.
College sports, how does that fit in?
Well, it lets athletes get paid via Venmo, but more broadly, it embeds Venmo everywhere on campus. Think bookstores, tickets, concessions. You can pay with Venmo.
Embedding it into the student ecosystem. Clever.
Seems to be working. Pay with Venmo TPV was up over 45%, and big brands are adding it too. Sephora, KFC, Taco Bell, Pizza Hut.
Wow, okay. So Venmo's becoming a real payment option.
Definitely. Even the Venmo debit card saw monthly active accounts jump over 40%. People using the physical card more too.
Which brings us to cards in general, right? Their omni-channel strategy.
Precisely. Across both PayPal and Venmo, debit card TPV grew over 60%. Monthly active accounts for cards up over 65%. That's huge growth.
60% TPV growth for debit.
Yeah. And they onboarded about 2 million first-time PayPal and Venmo debit card users just in Q2 in the U.S. alone.
2 million new card users in 1 quarter.
Massive influx. And they've also launched a new physical card for PayPal Credit, which is interesting. It lets people use their credit line in physical stores for the first time, even offering promotional financing on things like travel. Plus, they have the PayPal Cashback MasterCard.
So getting physical cards into people's hands is a big push. Why?
Because the data is apparently crystal clear. Customers who adopt one of their card products, they transact more often, they choose PayPal more for online shopping, and crucially, they deliver much higher average revenue per account, like 3 times higher for debit card users.
3 times. Okay, that explains the push. Massive opportunity there.
Absolutely. And one more example on this omnichannel point, look at Germany. They launched what they called PayPal Everywhere.
Okay, what does that involve?
Some really groundbreaking stuff, actually, like the first PayPal contactless mobile NFC wallet on both iOS and Android there. They also have a flexible pay later to go for using BNPL offline. And even in-app cashback offers at thousands of stores.
So truly trying to be everywhere.
Exactly. They ran a big marketing campaign with Will Ferrell, apparently got over 3 million NFC enrollments. And those users are transacting, on average, 16 times a month with it.
16 times a month. Wow. That shows real engagement.
It really demonstrates they can drive adoption both online and offline when they put the pieces together.
Okay, that's a really comprehensive picture on the consumer side. Let's pivot a bit. What about the merchants, specifically their PSP business, the payment service provider side? How's that focus on profitability playing out?
Yeah, so on the PSP front, particularly with large merchants, they feel they're kind of on the other side of that reset they did a while back to focus on profitability.
The reset where they maybe walked away from some low-margin deals?
Exactly. They're basically saying, our strategy worked. Braintree TPV, which is a big part of their PSP offering, was roughly flat in Q2. But importantly, they expect that to accelerate in the second half of the year.
Okay, so stabilization now, growth expected later.
Right. And they're also investing heavily in what they call value-added services, things like payouts and Hyperwallet.
Those are for businesses sending money out, right?
Correct. Used by big travel companies, mobility platforms, social commerce. And interestingly, these services were also a strategic enabler for those college deals we talked about with Venmo. So it's not just processing payments coming in, it's facilitating payments going out, makes them stickier.
Got it. What about smaller businesses, SMBs?
For SMBs, the focus is migrating them onto their newer platform, PayPal Complete Payments, or PBCP. They said over half of SMB volume is already flowing through PBCP now.
Streamlining things.
Yeah, standardizing the offering. And they've expanded PBCP into Singapore recently. They also highlighted an expanded partnership with Wix, the website builder.
Okay, how does that work?
Basically, Wix merchants get easier access to PayPal's full suite of payment tools directly within Wix Payments. It's about deeper integration, making it seamless for Wix users to leverage PayPal's capabilities.
Right, making it easy for merchants. Okay, let's shift gears again. Let's talk future stuff. The cutting edge. How is PayPal playing in areas like AI, advertising, crypto? These seem like big, maybe riskier bets.
They are big bets, but PayPal seems pretty committed. Take agentic AI. That's AI that can kind of act on your behalf, right?
Sure.
Find products, maybe even check out for you.
Okay.
PayPal says they're at the forefront here. They launched the first remote MCP servers for commerce earlier this year. Think of that as the secure computing backbone needed for these AI agents to actually transact safely.
So building the infrastructure for AI shopping.
Exactly. And they're partnering with major AI players, Perplexity, Anthropic, Salesforce, to enable these agents to find products, check out within the AI chat window, track purchases. It's pretty futuristic stuff.
How do they make that secure? Seems like a risk.
That's where they highlight their differentiated KYC and KYC expertise. Their Know Your Customer processes are apparently crucial for making AI-driven transactions safe. And this ties into that PayPal world concept we'll probably get to.
Interesting. Okay, what about advertising? That's a newer area for them.
Yeah, they're building out ad products focused on personalized shopping. One is off-site ads, using PayPal's purchase data insights to target display and video ads across the wider web.
Using their data for targeting.
Right, but maybe more innovative is storefront ads. With these, the consumer can actually browse, shop, and pay directly inside the ad unit itself.
Pay inside the ad.
Yeah. Seamless checkout, direct merchant integration. The ad effectively becomes a mini storefront. It's not just driving clicks, it's driving conversions right there.
It's quite different. Okay, and finally, crypto and stablecoins. What's the play there?
They see their stablecoin, PYUSD, as pivotal for advancing global commerce. The idea is it tackles the high fees and slow speeds often seen in cross-border payments, offers a stable, cheaper alternative.
So, using crypto rails for efficiency.
Pretty much. They've added rewards for holding PYUSD, expanded it onto more blockchains like Stellar and Arbitrum, and this links to their Pay with Crypto feature.
Right, letting people spend their crypto.
Yeah, it enables instant conversion from crypto to stablecoin or regular currency, supporting over 100 cryptos and wallets. They see this as tapping into a huge pool of over 650 million crypto users globally.
So basically expanding their reach and transaction types.
Exactly. They framed it as an expansion of TAM, total addressable market, at pretty attractive economics, facilitating new ways value moves online.
Okay, this next one. You mentioned it briefly. It sounds potentially huge. PayPal World. What is this? It sounds almost too ambitious given how fragmented digital payments are globally.
It is ambitious, but it aims to solve a really fundamental problem. You've got, 3.5 billion people using digital wallets? It's how most digital payments happen globally, like 83%.
Right, wallets are everywhere.
But it's incredibly fragmented. As a consumer, you travel or you want to buy from an international site, and you're never quite sure if your wallet will work there. It's friction.
Definitely felt that pain.
And for businesses, especially smaller ones, trying to integrate dozens of different wallets from around the world, it's complex, costly, creates a bad experience, and limits who they can sell to.
Okay, so that's the problem. What's the PayPal World solution?
The idea is simple in concept. Connect any consumer with any merchant seamlessly. The big news is the initial collaboration. 5 of the largest digital wallets globally are joining forces on this platform.
5? Who are they?
It's PayPal itself, Venmo, Mercado Pago from Latin America, Tente Global, which is linked to WeChat Pay in China, and UPI, the dominant payment system in India.
Wow, that's a lot of users covered right there.
A huge number, and here's the aha moment they described. Imagine someone in India using their familiar UPI app. They're shopping on a German website that accepts PayPal. They click the PayPal button, and instead of needing a PayPal account, their familiar UPI payment option just pops up for them to approve the transaction.
So they pay with UPI, but through the PayPal checkout flow.
Exactly. No new accounts needed, no complex steps. It extends PayPal's reach beyond their own 400 million users to potentially over 2 billion consumers worldwide covered by these initial partners.
2 billion, that's a game changer for merchants.
Massive. And crucially for PayPal's model, the merchant still maintains their existing PayPal checkout economics. So for PayPal, it's purely expanding their total addressable market.
And does this work offline too?
They say yes. The vision is you could take your Venmo wallet, travel to India, see a local merchant's UPI QR code, scan it with your Venmo app, and pay.
Scan a local Indian QR code with Venmo. That's pretty seamless if it works.
That's the goal, making your preferred wallet truly global. And they stressed it's designed to work with dynamic buttons, stablecoins, even that agentic AI shopping stuff.
When is this happening?
They expect it to start going live beginning in the fall. And apparently they're already getting lots of calls from other wallets around the world wanting to join.
Oh, okay. It sounds incredibly promising, revolutionary even. But we've seen attempts at Cayman interoperability before that kind of fizzled. What are the real hurdles here? How do they make sure this doesn't just become another complicated layer?
That is absolutely the key question.
Yeah.
And, a valid concern. They acknowledge the history here. Their answer seems to be a deep focus on making the experience feel completely native. So when that UPI user pays, it feels just like a normal UPI payment, not some clunky handoff.
User experience is paramount.
Totally. And they also mentioned having CEO to CEO conversations between the partner wallets. That suggests a very high-level commitment to making this work smoothly, aligning not just technology, but also business goals and navigating different regulations.
So top-down alignment.
Seems like it. Starting with these 5 giants gives them a massive base and maybe the collective clout to push through the complexities that have tripped up past efforts. It's still hugely ambitious, no doubt, but the approach seems thoughtful.
Definitely one to watch closely this fall. Okay, beyond all the exciting new products and strategies, let's quickly circle back to the financials. What's the outlook for the rest of 2025? Are they feeling confident despite, the mixed economic signals out there?
Yeah, their guidance definitely signals confidence. They actually raised their full-year guidance for both transaction margin dollars and that non-GAAP EPS number.
Rains, okay.
Yeah, they now expect full-year non-GAAP EPS between $5.15 and $5.30. That's up 11% to 14% year over year. And they reaffirmed their free cash flow guidance too, still expecting $6 billion to $7 billion for the year.
That's strong guidance. Did they acknowledge the macro uncertainty at all?
They did. They mentioned seeing some slight softening in U.S. retail spending and called the overall environment uneven. But, and this is important, they said their guidance is built to absorb potentially a couple of points of deceleration in e-commerce spending, if that happens.
So they've built in some buffer.
Seems that way. They also mentioned transaction losses ticked up a bit in Q2, hit 9 basis points. But they expect that to settle back down to around 8 basis points for the full year, attributed it partly to normalization and partly to new products like debit cards finding their footing.
Okay. Anything else on the cost side?
Yeah, they booked about $92 million in restructuring costs in Q2. This is related to those workforce actions we heard about earlier, but also a bigger 3-year tech transformation plan.
Tech transformation.
Re-engineering infrastructure, streamlining operations, getting out of some data centers, the usual suspects. The goal is more speed, flexibility, better data use, scalability, the long-term efficiency play.
Investing now for future gains.
Exactly. Their overall message was, look, turning a ship this size takes time. Bending the growth curve, as they put it. But they're confident the actions they're taking now position them well to accelerate growth over time.
Okay, so let's try and tie this all together. For you, the listener, whether you're a consumer, maybe a small business owner, what's the big picture takeaway from all this?
Well, if you step back, all these moves, transforming Venmo, pushing cards, the huge ambition of PayPal World, it really points towards a future where payments become much less visible, much less of a hassle. The friction, online and offline, across borders, they want that to just melt away.
Making buying and selling simpler, globally.
Exactly. Making it intuitive. Your preferred wallet just works. Wherever you are, whatever you're doing, that seems to be the end game they're building towards.
Which inevitably leads to a final thought. If they or someone actually achieves this truly seamless, globally interoperable payment layer where your wallet works anywhere for anything, what happens next? What kind of new commerce, new global interactions might pop up that we can't even really conceive of today?